Australia is the sixth largest country by land area and has a GDP estimated to be $1.7 trillion. Now, these seem like relatively normal numbers, but what if I told you, until the events of 2020, Australia went nearly 27 years without a recession, became home to some of the wealthiest citizens in the world, and even circumvented the 2008 financial collapse? For over a century, Australia rode on the sheep's back, quite literally that is. 50% of Australia's GDP in 1949 was a result of wool exports. The issue with this is that they were at the mercy of the market and its volatility. During the Korean War, the US decided to buy lots of wool, pretty much flooding the Australian economy with money. This caused an economic boom and inflation overnight. At the time, the Australian dollar was a fixed exchange rate currency. Fixed rate currencies make it very hard to act in times of crisis, as the resources are usually tied up keeping it pegged to the euro or dollar standard. In 1983, the Parliament decided to move the Australian dollar away from the fixed exchange rate in favor of free floating currency. This meant their dollar was now valued through supply and demand of money within the international currency markets, and this laid the groundwork for a series of deregulations to come. This added licensing to foreign banks, lowering tariffs, loosening restrictions around loans, and stepping away from centralized wage regulation. All this leading to a freer, more competitive market. Australia's biggest advantage by far is its land and location. It's home to many sought-after natural resources, and because most of its population is heavily concentrated in the eastern seaboard, there is plenty of land to mine through. Australia has abundant amounts of valuable materials, and it happens to be convenient that Australia was geographically nearby growing Asian communities. In just 2018 alone, Australia had $270 billion of exports. The mining industry as a whole grew at an average annual rate of 4.3% from 1991 to 2018. Now, although it may seem mining and exports are a huge part of Australian GDP, they're not. They only account for 7% of their GDP and 3% of their total workforce. One of the most observable contributions to this period of Australia's growth has been its strong population growth, growing at an average rate of 1.3% over that period. Their high standard of living is what truly attracts people to Australia. It has great schools, hospitals, it's very safe, clean, and there are a lot of opportunities. The population is also its biggest contributor to the GDP of Australia, with services comprising over 50% of GDP. Australia also happens to be home to some of the wealthiest citizens in the country. The average net worth of individuals here is $411,000, and even more shocking is the median net worth at $191,000. This means that wealth here is not that unequal, making an average Australian worth about 3 times wealthier than a US citizen. The biggest driver of Australia's economic boom was the deregulation and globalization of the country. The Australian government appointed Fair Work Commission, which is a board of economists who regulate the minimum wage in the country every year based on economic data and inflation. The second policy the government has enacted was the Compulsory Superannuation Fund. In 1993, they passed the Superannuation Industry Act. Now, this is a pension fund that applies to all workers. Everybody contributes 9.5% of pre-tax earnings, and they are invested for them. When they retire, they can withdraw the money from it tax-free. In just June of 2018, the Superannuation Fund reached a total assets under management of $2.7 trillion. That's more than double the GDP of Australia. One of the pivotal policies for growing the wealth of Australian citizens has been housing. The Australian government has a policy called negative gearing, which makes investing in real estate very tax efficient. This means people would rather own property than put money in the stock market. This policy allows property owners to offset their income with losses from operating a rental property. This has led to immense inflation in the housing market, driving home prices to an astronomical rates, making it one of the most expensive markets in the world. An average 4-bedroom home in Sydney would cost well over $1.5 million, and the rapid rise in home prices is a major reason why Australian net worth is very high. The last policy that has driven Australia's economy is their very open policy on immigration and foreign investment. They openly invite those with in-demand fields such as engineers or doctors. The foreign investment visa allows individually wealthy people to migrate to the country after significant investment. The rationale behind this is that the government hopes the inflow of foreign money from these new migrants will boost the economy, which it does. Less known is Australian tourism industry. The country relies heavily on foreign spending for its economic growth, and tourism is one of the biggest contributors to consumer spending. Australian banks avoided getting overexposed to subprime mortgages and other instruments that led to the collapse. The first way they were able to avoid it was with the booming commodities export during the run-up and during the crisis. Before the crisis, China's massive industrialization helped fuel Australia's mining industry and led to exorbitant prices. The second was how quickly the Australian government responded to the crisis. They first slashed interest rates to zero, then guaranteed all Australian bank deposits, and then announced a $10.4 billion stimulus package, which had $8.7 billion that would flow to pensioners and low-income families, $1.5 billion for housing construction, and $187 million for new training places. The impact of COVID-19 is monumental in Australia's economy. Because of COVID, Australia was on lockdown. No one was getting in or out of the country, leading to a massive decline in tourism spending. Not only that, many businesses were forced to shut down due to health regulations, despite the government and central banks supporting the economy. With businesses closed, household spending on goods and services declined and unemployment rose. With consumer spending accounting for 50% of Australia's GDP, COVID took a massive toll on Australia's economy. The biggest thing to learn from Australia is how well run and strong its central bank and government are. They're able to react to economic shocks very quickly. The second is how progressive the government is at helping people save for retirement. The last is to diversify. Australia relies heavily on consumer spending, tourism for its economy. It comprises over 50% of its GDP, and anything that could disrupt it could dismantle their entire economy. It would be wise for governments to spread things out to reduce risks.